Welcome back to our Talking Economics series, and joining us today, the Commonwealth Bank of Australia's Chief Economist, Stephen Halmarick. Stephen, thanks for joining us.
My pleasure, thank you.
Stephen, the RBA has again left rates on hold. What's your thoughts about the August result?
Yes, that's right. So the Reserve Bank left the cash rate at 4.35% in the recent board meeting. That was widely expected, including by us. And that came after some slightly better than expected inflation numbers that came out at the end of July. They showed the underlying inflation rate, down a little bit in the year to June quarter. But the Reserve Bank does continue to signal that they're worried about the overall level of inflation. They want to see that come down further. Base case is we expect rates to remain on hold in the near term, but we could see an interest rate cut in November as inflation continues to decelerate.
Well, last month we spoke about global markets volatility, and since then we've seen a further increase off the back of softer US labour market data. What's your thoughts? Will the RBA take that volatility into account?
Well, yes, certainly been a volatile time in markets, and as you mentioned, we had some slightly weaker than expected US employment numbers recently, and that got the market worried that the US economy was slowing down too much, that they may enter a recession. In response to that, it does look like the US Federal Reserve is going to join some of the other major central banks in cutting interest rates. So far we've already seen the European Central Bank, the Bank of Canada, the Bank of England all lower interest rates, and we now think that the US Federal Reserve will start cutting interest rates in September, and other major central banks will be looking to cut rates in the future as well.
And does the current volatility change your view on global growth?
Well, we have recently revised our global growth expectations for calendar 2024 marginally down to 2.6% growth for this year. Previously we were expecting 2.7%. And for calendar 2025, we've upgraded our global growth forecast to 2.8%. And so the better 2025 is on the back of these lower interest rates. So expecting lower interest rates across most of the major central banks, and that will help growth later next year.
And finally, Stephen, in the coming weeks, closer to home, what's the key data we should be focused on, talking HSI?
Well, I think one of the big points of discussion in Australia at the moment is, will the income tax cuts that came in early July and the electricity rebates, will they really boost consumer spending and maybe work against the Reserve Bank's monetary policy aims? But the July Household Spending Insights that we produced from CommBank data is actually flat on the month of July. So there was an increase in spending of things like household goods, but a reduction in spending on recreation and food and beverage. So overall, 1 month worth of data, spending is still pretty soft. And that's likely to be shown again when we get the June quarter national accounts. They're coming out in the first week of September, and they're likely to show very soft growth yet again in the June quarter, with annual growth rate likely to be under 1%. That's going to be the weakest pace of economic growth in Australia in about 30 years outside of the pandemic. So far, near-term data is still looking quite soft on the Australian economy, and as I mentioned, we expect inflation to continue to decelerate, and that'll help the Reserve Bank eventually join this global trend to lower interest rates.
Thanks, Stephen. See you in September.
Thank you. My pleasure.